Hi guys, welcome back to Finpact. Today I want to talk about how I believe that Apple, Alphabet and Amazon are three top FANG, so F-A-A-N-G stocks that will turn, in my personal non-financial advisor opinion, when the market sentiment changes for the better and when the Federal Reserve decide to pause interest rate hikes. Now, this will only happen when inflation starts looking more under control. Right now, we all know that the Federal Reserve and central banks across the world have been increasing interest rates to help curb inflation, which has been the highest we've seen in 40 years. I truly think that Apple, Alphabet, and Amazon stocks are all undervalued right now because expectations are very low. This is because of the overall market sentiment. We're going through recessions globally in different countries. Well, you could call it a global recession. Economies are so intertwined nowadays, so it's hard to miss, especially with huge conglomerates and large multinational companies all over the world. And Amazon, Apple, and Alphabet are definitely those. Right now, the expectations are low. Globally, we're going through quite a lot of economic turmoil. Growth rates have also slowed down. Now, what is interesting is that we did expect these FANG stocks to keep the stock market alive, especially in this 2022 bear market. And I must say, big tech has been probably the last domino to fall, but they have landed on their feet because they have the funds to do so. They have the innovative tech to still be resilient in markets like this. It's actually those speculative, unprofitable technology companies that have fallen harder. A lot of people are saying that FANG stocks' glory days are over, but I do think that Apple, Amazon, and Alphabet have a lot of potential, and I'm going to go into why in this video. Going on to tip ranks, let's take a look at Apple's stock price. Currently, it's sitting at $148.68. The analyst rating consensus is a strong buy. One of the really cool things about tip ranks is that they collect all the ratings that different analysts across Wall Street have given a particular stock. So they do the research for you and they give the stock a target price. This target price is based on their own expectations and their research, but it can be really handy to get an average analyst price target. And in this case, the average analyst price target is $178.86. But what's really cool is that out of all the ratings, so 27 ratings, 23 are a buy, 4 are a hold, and only 0 are a sell. And you can scroll down and see some renowned names like Evercore, UBS, Credit Suisse, JP Morgan, etc., Morgan Stanley, Bank of America, Barclays. So you can see there are so many huge bulge bracket banks, investment banks that are giving ratings, and also some elite boutiques. So that can be really handy to see. But one of the things I have to say is that Apple's price right now is subdued. It's not crashed as much as we've seen crypto crash. Let's take a look at this. In the last year-to-date chart, it's really volatile, but we aren't at some major low. Yes, we are at a lower point, so it's a good entry point in my opinion. But if you take a look at the 5-year chart, I think Apple's stock price has been pretty resilient over the last 5 years. Of course, it has had some upswings and downswings due to natural cycles in the market, and recently we did see a downswing. But Apple's quarterly results were incredibly good. I do think Apple has demonstrated resilience, and I also think people are discounting the potential impact of their mixed reality digital headset that has been speculated on. There have been rumors, but we do know that lots of companies in the tech sector are transitioning over to provide their technology or their services towards the metaverse. So just quickly looking at their fourth quarter revenue results, they had a September quarter record for revenue and EPS. So the EPS was $1.29, whereas the consensus was $1.27. So it did beat consensus, and it's been up, the EPS up 4% year over year. Annual revenue was $394.3 billion. This was also up 8% year over year. So I must say, given all the losses we've seen across many of the tech stocks in this bear market, Apple has proven to be resilient. And as you can see, Apple CEO Tim Cook has said that the quarterly results reflect Apple's commitment to their customers. I truly think that Apple's customers are demand inelastic. So they are so loyal to Apple's products that they will buy them irregardless of a small price increase. So Apple has the power to increase the price as and when they want, and people will still buy. They won't see a huge drop in demand and sales just because they've increased the price significantly, which sort of goes against the typical laws of economics with supply and demand and increasing prices. But that's the thing, Apple has large monopoly power in the markets when it comes to tech products. Also, what's really interesting is that the TipRank Smart Score gives it a 9. The TipRank Smart Score tells you how likely a stock is to outperform the market. And a 9 is that it is probably most likely to outperform the market, of course 10 being the highest. It's basically a quantitative scoring system that collects 8 key metrics and gives it a score about whether a stock is likely to outperform the market. It seems like Apple stock is too good to pass up right now. The financials are solid and they are going to be expanding their product mix. And I'm going to quickly show you what we know about their VR AR headset. So this one is the one that is always talked about and it's rumored, but it hasn't materialized yet. But one thing that we can say is that the company has said that they have big plans for augmented reality. So naturally, I would expect them to be making something. I personally think that the Apple stock is too good to pass up. Currently, the trailing earnings is sitting at 24.6 times. So the multiple is pretty good. All right, let's take a look at Google. Currently, the Alphabet Class A stock price is $96.11. The analyst rating consensus is a strong buy based on 29 ratings, and all of them are a buy. There's not a single hold or a single sell recommendation by analysts. And the analyst price target is $129.72, which is a 35.04% upside from where we're at. I personally think the Alphabet stock price has higher upside potential, but the Q3 results were terrible. Yeah, so as you can see, Alphabet's stock price has been a lot more volatile. It's not been as resilient as Apple, but the reason this has happened especially is not only just the current global macroeconomic pressures that we've seen, but also that they missed their earnings in their Q3 results. In fact, they missed their expectations by a significant amount. These results were hugely disappointing and they missed their bottom line estimates. So it's not been ideal. They delivered a revenue of $69.09 billion compared to what they were expecting to deliver, which was $70.58 billion. Despite its horrid growth, I do think it's going to bounce back later when the recession ends. I must say that their quarterly flops recently have been very discouraging and they've not had a good trailing earnings multiple, which is sitting at 19.3 times, which is actually a bit too low for a company that has some of the most prized tech assets out there. So they're getting more and more pressure to cut costs. But I do think that search, Google Cloud and YouTube are still untapped, and I think they have more potential to grow and contribute towards the revenue later down the line. Next, we have Amazon, which has lost more than 51% of its value. The current price for Amazon is sitting at $91.70, but the analyst rating consensus is a strong buy. This is based on 33 buy ratings. 2 of them are a hold and 0 are a sell. The Amazon stock price prediction is $140.06, which is a 52.69% upside from where we're at. I do believe that, again, the stock has been subdued in growth because of the global macroeconomic pressures. So very similar to what we've seen to the broader technology stock market. I must say that Amazon stock has had one of the most painful stocks for investors, and the new CEO, Andy Jassy, hasn't really impressed investors either. Andy Jassy has also said layoffs will continue into the next year. I also think that it's mostly macro to blame and investment in overcapacity, especially given that we have a rising interest rate environment. And that, of course, has been massively concerning. Their costs have just constantly risen. One thing you must know is that their stock trades at 2 times sales. So that is an absolute bargain for any growth stock out there. Management did also guide cautiously in the most recent quarter, and I think if the macroeconomic situation and the recession improves, then I think Amazon is a stock that will bounce back in the future. I'll do a more in-depth video on Amazon's financials. For the sake of this video, I think it's already too long. So stay tuned for that video, and I will be posting a lot more stock market updates as well as crypto market updates going forward. So hit that like button and that subscribe button and that bell notification so that you get informed on when I release a video, as a lot of the information is time sensitive. Also, remember, this is not financial advice. Make sure you do your own research before you invest in anything. I'm not a licensed financial advisor. Anyway, guys, thank you for watching, and I will see you in the next video. Bye.